people. So, sir, who can initiate corporate insolvency resolution process? So now you have seen, sir, FC, OC, CD, correct? Hey, not people. So now if they have to start, what is that they need to give? What you just come and tell adjudicating authority, sir, that person did not give me money, sir. He will accept offer. What you are a very authentic person, people. There should be something, right? People correct up before that we saw that IBBI. Now people try to make references, try to understand. Appointment of RP, people, they are in the stage where committee of creditors is formed and a RP is appointed. Withdrawn will come, people. I'll tell you what is withdrawn. There is the status. I've given you the note there. People admitted, people dismissed, admitted. Appointment of liquidator, meaning what, people? Committee of creditors did not go through the resolution plan. It was not okay with them. People, CIRP came to an end. Yes, people. It is in the resolution plan status. Resolution plan. It has accepted. People, this is in the liquidation. Liquidation, almost it's in the status. Here it is appointment of liquidator. Here it is liquidation. Voluntary dissolution, that is our last topic of discussion. Yes, see, withdrawn. What is withdrawn now? We'll see. Yeah, will come. I'll show you one more example before we start. People, this concept now, people, bullet, it should go inside forever. You should not forget this. See how big it is, this chapter. People, very famous CIRP process, this one, very popular. Yes, people. Sir, public announcement, adjudicating authority, people. Sir, for the attention of the creditors of Kingfisher Industries Private Limited, relevant particulars, sir, Kingfisher Industries Private Limited, date of incorporation, sir, 11th April 2012, registrar of companies, authority under which corporate debtor is incorporated or registered with ROC. Yes, what is that? I'll tell you. That is also, I'll tell you somewhere. I'll give you the reference. Sir, insolvency commencement date in respect of corporate debtor 20th March 2018. Estimated date of closure. When are you planning to close it? Sir, 16th September 2018. Name and address of the interim resolution professional, Mr. Alok Kaushik. Yes, people. Registration number. See here. He has cleared the exam. Limited insolvency examination. Lie. Yes, people. Basically, who conducts it? IBBI only conducts it, people. Sir, how do I become? You need to first register with your IBBI and enroll yourself with the agencies. Correct? That is what we saw. Last date for submission of claims. People able to see? Sir, what is this form? I'll tell you, people, all these are there for us. There, recently, one more company, people, Kingfisher went into insolvency, and people, this one, Videocon was also under this process. So a lot of other people, yes, there was this, I'll tell you the name. They are this real estate people, very big name. Because of them, because they failed, because of them only they introduced one entire terminology into this particular topic. That is called allottees. I'll tell you who are they. Okay. Now, sir, who can initiate CIRP? First people, the first person who can initiate is financial creditor, which is given under section 7. Sir, who is a financial creditor? A person to whom a financial debt is owed, to whom we need to pay, and it includes a person to whom the debt is transferred, meaning assignee. Sir, we took money from ICICI Bank. So ICICI Bank becomes a financial creditor. So people, imagine he was not able to recover. He has transferred the non-performing asset to asset reconstruction company. So sir, to whom the debt is transferred, sir, he will also be considered as a financial creditor. Sir, example, banks or creditors. Is this clear? All of you will go in detail. Sir, now, so that is called financial creditor. Sir, what is operational creditor? A person to whom operational debt is owed, and it includes assignee. For whom financial debt is financial creditor. Operational debt is operational creditor. Example, claim in respect of goods sold or services provided, like employee salary, all these things comes under operational creditor. Fair enough? Okay. Corporate debtor, a company or LLP which owes debt. So people, all of them to whom we owed, here we only owed it. That is what we are writing, which owes debt. So we only have to pay to any person. We are called as corporate debtor. Clear, all of you? Sir, now in all these places you have written something called debt, operational debt, financial debt. Now what do you mean by those operational debt? What do you mean by financial debt? Come, let us go to definitions. Let us try to understand. I hope you are getting a fair idea how I am taking this. You got the process. We saw the topics. Wherever we want, we will go to definition. Clear? Now, good people, you are all. Yes, people. Try to remember important definition. Sir, debt means a liability or obligation in respect of a claim which is due from any person, and it includes a financial debt and operational debt. So, sir, financial creditor, financial debt, operational creditor, operational debt. Now, what is this financial debt? Financial debt means a debt along with interest. Sir, both. So, principal also interest. If any, which is, sir, what is this if any? People, at times, there are certain cases where you take loan even without interest. So, even that will be also covered. So tomorrow, if people said debt along with interest, mine was without interest. What if mine is not covered? Even you are covered. Which is dispersed against the consideration for the time value of money, and it includes. People, first one, borrowed money. So people, interest and the loans taken, people. So can I say loan, money borrowed? Yes, sir. Second one, people, any amount raised by acceptance under acceptance credit facility. Any amount raised by acceptance under acceptance credit facility or its dematerialized equivalent. People, what is this, people? In simple terminologies, I'll tell you. This can also be a overdraft. Yeah, it can also be a overdraft, or in certain places, people, this is also considered in this way. Generally, what happens, people, there is a seller. Yes, sir. The seller, people, he wants somehow his products to be sold. Yes, sir. Sir, there will be a buyer. Sir, he may have money, he may not have money. Yes, people. So people, at times, what happens? There will be a bank. There will be a bank. So people, the bank gives, it's like, it gives a credit facility. It gives a credit facility. Yes, people, and it is because the seller has a value. It is because the seller has a value. So people, any amount raised by acceptance under any acceptance credit facility or its dematerialized equivalent, meaning people, if all of this even happens in physical or electronic form, basically something similar to overdraft facility, people, even that is considered as a debt. Or whenever you are selling anything to a buyer, yeah, sir, but you are also not having money, buyer is also not having money. People, if a bank gives a credit facility to the buyer, sir, which is because of the seller's goodwill. I mean, the bank is tied up with seller. Seller offers this credit facility because the banker ties up with seller to give this facility. So, sir, even that becomes a debt on you. Sir, even that is a financial debt. Yes, people? Any amount raised pursuant to any note purchase facility or bonds or notes or debentures or loan or any similar instrument. Sir, we know bonds, we know debentures, we know loans. Sir, what is this note note purchase facility, notes. People, nothing that this is also like a debt instrument only. It is also a debt instrument. It is also a debt instrument only. Sir, people, there are so many notes, people. Now, say for example, uh, now say note purchase facility. There are so many ways you can raise money. Now, I'll tell you one of the note. Say for example, one note is called as say convertible notes. Yeah, convertible note, I believe you guys would have heard. In deposits chapter in your CA interview would have heard. So people, even that is an instrument you issue to raise money. But there you have an option either to convert it into equity or to repay the repay the money on maturity. You have both the options, people. So people, note is basically again like a debt instrument only. But sir, what exactly happens here? What happens in any debt instrument, people? Sir, the company issues a debt instrument, and it will raise money. Correct? Yes, sir. So imagine, people, in note, I will issue this notes. Yes, it is an instrument. I will issue to people or whoever is buying it, and I will raise money from them. Now, people, there will be a maturity period. Imagine 5 years. On 5 years, people, I will purchase the notes back and I will repay the money. So people, I will take the notes back and I will repay the money. So people, this is called as note purchase facility. Yes, people. Yes, note purchase facility. So basically, people, any money raised in form of debt, sir, whatever is the scenario, people, it is considered as debt only, financial debt, because you have raised money, no, ultimately. Next one, people, the amount of any liability in respect of any lease or hire purchase. So people, the amount of any liability in respect of lease or hire purchase contract which is deemed as a finance. So people, your lease or hire purchase where you have to pay money. Yes, people, your lease or your hire purchase contracts, hire purchase, people, what is that? A money borrowed wherein it will either be considered as if you pay the installments, the 20 installments. I hope all of you know this, all your foundation things. What is hire purchase? Sir, imagine there is 20 installments I need to pay. Until you pay the 20 installments, you will not be the owner, but the possession will be with you. You can enjoy the property, but ownership will be transferred only after you repay the last installment. So sir, any amount of any liability with regards to the lease or the hire purchase is considered as a financial debt only. Yes, people. Okay, next one. Sir, receivables sold or discounted other than any receivables sold on non-recourse basis. Sir, what is this receivables sold? People, concentrate. People, in the industry, there are certain people who provide this facility and they are called as factors. Factors. Sir, what do they do? Listen to this carefully. Sir, a company needs to, imagine, people, the company has sold some goods to a person, but the person, people, has not paid the money. We had sold it on credit. He has not paid the money. People, if he has not paid the money, obviously this person will become our debtor. Now people, for a company, isn't it a loss? So what will the company do? The company will approach these companies called as factors. What will the factors do? The factors, people, whatever is the money, imagine he has to pay around 1 lakh. The factors, people, they will pay immediately some 95,000 or 92,000 as the case may be. They will be their commission. Immediately you will get 92,000. Now what will factors do? People, factors will go and recover the money from these people. Sir, in short, like Gundas people. They will go and recover the money from this debtor. Yes, people, are you getting the point? So this is called as factoring. So people, whatever you did is you sold your receivables. You sold your debtors. Yes, sir. Sir, I sold. No. I got the money. No. Then why is it still coming under financial debt? Sir, I sold them. They gave me money. Then why is it still coming under financial debt? Read the next word, that is more important. receivables sold or discounted other than any receivables sold on non-recourse basis. Other than any receivables sold on non-recourse basis. People, what do you mean, people? There are two things. One is called as recourse, the other one is called as non-recourse. So they are telling what, people, other than non-recourse. So sir, if you have sold your bills, people, that is your debtors, if you have sold it on non-recourse basis, then this is not a financial debt. If you have sold it on recourse basis, this is a financial debt. Sir, now what is this recourse? People, listen to this carefully. This recourse or non-recourse is a facility provided by the factor himself. What is that? People, in this, if it is a recourse or non-recourse, it depends upon who will bear the risk. Sir, what do you mean by that? Imagine, people, the factor went to collect the money from the debtor. The factor went and he went to collect the money from the debtor. Okay. People, if the factor gets the money, all well and good, the matter gets settled. Sir, the factor was not able to recover the money. The factor is not able to recover the money. How much soever he tried, he was not able to recover the money. So people, now who will bear this risk? We did not receive the money. Who will bear this risk? Sir, it has to be either the company which sold or it should be the factor. It should be the company or the factor. People, if it should be company or the factor. If the company said, I will only bear the risk, then it is called as recourse. If the factor said, I will only bear the risk, it is called as non-recourse. Always remember, people, for non-recourse, the commission is more. They charge more percentage. You guys can be thinking, sir, then why should we go with factoring? We can only do that. No. People, do you have so much of infrastructure? Do you have gundas? Can you handle all that? Can you manage one more department? Marketing and sales and contacts only we cannot handle. Can you recover the recovery? Can you control that recovery department? It's not so easy. So people go to factors. But of course, it is not very, very popular off late. It's becoming less and less and less. But yes, that is there. So sir, now what did we see? People, if at all there is a factor, we have sold our receivables on a recourse basis. Meaning, sir, if you are not able to recover, you get it back to me. I will repay the money to you. Whatever 92,000 we have taken, we will give it back to you. So people, if the factor is not able to recover the money, he will come to us and he will recover the money from us, 92,000. That is what is covered here. Now read. Receivables sold or discounted other than receivables sold on non-recourse. Non-recourse, it's okay because factor will, he will bear the risk. Got it? All of you. Next one, any amount raised under any other transaction. Any other transaction, including any forward sale or purchase agreement having the commercial effect of borrowing. Any other transaction which has a commercial effect of borrowing, people, it is considered as what? It is considered as financial debt. Sir, till here it was not so important. They added an explanation, people. That is when this F point became important. Any amount raised under any other transaction, including a forward sale. Ye kya hai, sir? Forward sale? People, this is what I told you. Recently, there was a real estate developer who went into insolvency process. Sir, what is this, people? What used to happen? We are giving money back. We have a process for debenture holders, any debt holders. We are giving it back to employees. Everyone we are undertaking. People, you think about these people who, sir, there are people like us. Sir, nowadays people, there are so many real estate projects. You know, we call them as realtors, real estate projects, builders, construction companies. What will they do, people? They will have a site. Yes, they will start issuing the brochures that in the next 2 years, 3 years, we are coming up with a plot. If you pay it today, you will get it at a 10 lakh discount or 8 lakh discount. Now people, we all will give money to him. Many people like us, Many people like us will give money. All our money is here. Sir, now what if this person becomes insolvent? What about our money? So people, future delivery. Are you getting the point? So people, we are called as allottees. We are called as allottees, or people, we are called as home buyers. We were recently added into the definition. If you paid any advance money that you wanted a house, and if these people did not get you back your money or the property, you can file under IBC. Clear, all of you? That is what is this explanation. Read. For the purpose of this subclause, any amount raised from an allottee under a real estate project shall be deemed to be an amount having a commercial effect of a borrowing. The expression allottee will have the same effect as per real estate. RERA people, RERA, you would have seen RERA, Real Estate Regulation and Development Act. Of late, that is also becoming a very boom. So people, allottee can be a residential or a commercial, any person. But basically, if you have given money for a future delivery of a plot, then people, you have to get the money. Yes, people? Yes, sir. Understood, people? Okay. Next one, people. Any derivative transaction entered into connection with protection against or benefit of fluctuation of any rate or price. People, if you remember, in external commercial borrowing, I had taught you this under hedging. Derivative transactions. What is derivative transaction? You make sure your future is secured, right? The fluctuations, all those things come under. So you have entered into a contract that you will settle the money on that day. People, that is also considered as a financial debt. Yes. People, next one, counter indemnity obligation. Counter indemnity obligation in respect of a guarantee, indemnity, bond, document or letter of credit or any other instrument issued by a bank. People, what is this? Counter indemnity obligation. At times what happens, people, listen carefully. Kingfisher wanted loan from, say, from some other company, some normal company. The company said, I will not give you this loan. So Kingfisher asked for SBI's guarantee. Can you give me surety? SBI said, sure, but I have one condition. What? If at all, tomorrow if you are not able to repay money, then because I have given a surety, I will have to pay him money. Correct. Now imagine Kingfisher did not pay. SBI had to pay. SBI has every right to recover the money from Kingfisher. SBI can go recover the money which SBI paid on behalf of Kingfisher. SBI can recover that from Kingfisher. People, this is called as counter indemnity. I gave you indemnity. Indemnity means what? If you suffer any loss, I will pay the money. Counter indemnity means I have suffered the loss, you pay me the money back. This is called as counter indemnity obligation. Okay, sir, next one. The amount of any liability in respect of any guarantee or indemnity for any of the items referred to A to H of this clause. So people, any liability where we have only given a guarantee or indemnity, which we have to pay. Sir, now you are the guarantee. You have given a guarantee to some other company that if the company does not pay, I will pay. Corporate debtor will pay. Sir, where, in which transaction you have given a guarantee? People, from A to H. A to H, some other company is borrowing the money and you have given a guarantee to them and they have not paid. Even they can have a claim on you. That is what is this. Yes, people. So this is what is your financial debt. Sir, questionable point, people. Any subscription money received by the company for purchase of shares is not a financial debt. If any person has given you share application money, people, that is not considered as financial debt. Yes, it was decided in ACPC Enterprises versus Affinity Beauty Saloon. Clear, all of you? So this is considered as what, people? Financial debt. Sir, what is operational debt? Operational debt is very simple. People, operational debt means a debt in respect of provision of goods or services, including employment. Or, this is important. People, any debt in respect of the payment of dues arising under any law for the time being in force, and we have to pay any money to central or state government or any local authority. So people, if government has to recover any money under any law, people taxes, anything, people, they will be considered as operational debtors. Any money, imagine I have to pay electricity bill to the local authority. Imagine we stay in Bangalore, yeah, sir, I have to pay money to this BBMP. Yes, people, the law says, people, whatever money you owe to them is considered as an operational debt. Is this clear, people? All of you, pakka? Yes, sir. Okay. So people, do one thing, revise the financial debt and operational debt once, and then come to the next video. Yes, people.